I'm here today with Empresaria's Rhona Driggs, CEO, and Tim Anderson, CFO, to discuss the group's interim results for the period ended 30th of June 2020. Rhona, how would you describe the period?
It's undoubtedly been the most challenging time I certainly have experienced in all my years in staffing. I have to say, though, I'm extremely proud of how the business has performed. We have demonstrated its resilience and certainly have tested the strength of our diversity. I want to extend my thanks to our teams for their perseverance and their commitment. It has been incredible to watch the teams rally around the world in the face of this crisis. We started the year strong, delivering year-on-year growth and profits each month from January to March. Clearly, the operational initiatives we started to put in place last year started to bear fruit in the first part of this year. However, the second quarter painted a very different picture as we started to feel the impact in March as companies around the world reduced staffing requirements and put in place hiring freezes in response to the COVID pandemic. In our industry, we are generally the first to go into an economic downturn as companies cut their temporary and permanent hiring. However, the flip side is that when the economy starts to recover, we typically feel it first as companies start to hire temporary again to give them the flexibility in uncertainty. And we were able to adapt quickly. Overall, the transition to work from home went extremely well. We were able to move the majority of our employees to work from home while maintaining service levels with our clients. We implemented comprehensive cost-cutting controls quickly without touching investment areas that are key to our long-term ambitions. We benefited also from the diversity of our businesses by sector and geography. And our response and steps that we had taken previously to optimize the businesses meant that we were also able to maintain profitability in quarter two. Given the extreme economic conditions we were faced with, we are very pleased with where we ended the half year.
Tim, can you give us a top-level overview of the results?
The first half of 2020 was really a tale of two quarters. The first quarter was before the pandemic started to hit, whereas the second, we were fully impacted by it. In the first quarter, we saw growth in profits year on year in each month, and that's despite the fact that NFI was down 5%, mainly due to the last 2 weeks of March, where we were starting to be impacted by the pandemic. Our second quarter was fully impacted. Net fee income was down 39%. However, because of the swift and decisive actions we took on cost, we remained profitable in the quarter, generating a profit at the adjusted profit before tax level. Our net debt reduced substantially from December 19, down to 8.9 million compared to 19.1 million just 6 months before. This is partly due to the strong cash management we put in place as soon as the impact of the pandemic became clear, but predominantly due to the inflow of working capital that we saw as activity levels reduced. We also took advantage of certain tax deferral schemes across the world, including the UK VAT deferral scheme, and this allowed us to move 3.5 million of payments out into the second half of this year and beyond. We continue to have very strong headroom levels. Our headroom was 18.1 million at the 30th of June. This reflects the positive movements in our net debt, along with an increase in our facilities that we agreed with our bankers. And we also agreed a relaxation of the covenants to ensure that we have the financial strength and flexibility during this crisis. We are very pleased with the strength of our balance sheet, and this stands us in good stead for the future.
Rhona, can you describe the operational efficiencies across the group?
Yes, of course. So while there were a lot of challenges, work continued to transform Empresaria into a more united and efficient business positioned for growth. An example of this is our continued investment in Bullhorn as the group's preferred front office technology. As we've spoken about before, Bullhorn is a leading technology provider, both for the front office as well as the back office sales platform. This technology is critical to our ability to truly unite the businesses together and provide us with the speed and responsiveness necessary to remain competitive in our industry. We were in the middle of implementation in 3 of our brands when COVID happened. And so we continued, however, to move forward with our implementation. We're happy to report that we went live with our new technology in those businesses on July 1st. Another example is the acceleration of our operating model evolution in key brands, enabling them to be more effective in temporary recruitment. As I've spoken about before, growing our temporary segment is a critical component of our strategic plan. We are moving much more toward a 180 recruitment model, and we have, in fact, accelerated that move during COVID. And this move will enable our temporary businesses to scale much more quickly and effectively in our goal, again, of moving the needle on the ratio between temporary and permanent business in our group. Our Stronger Together initiatives introduced last year continued to prove invaluable in navigating COVID-19. Early on, the group leaned into one another in support of those businesses and sectors that were hit hard. Swift and well-informed decision-making has been critical to getting through the crisis and was made easier through the investments we made in our central team and our new internal comms technologies, such as Facebook Workplace, that we launched late last year. The transition to a more performance-based group culture has continued, meaning we have been able to improve focus on the bottom line and respond much more quickly and effectively to challenges.
Where do you see signs of recovery?
So that's an interesting question because it depends on the day right now. All regions and sectors have performed very differently and will have very different rates of recovery. We are seeing positive signs of recovery in our offshore recruitment business as companies look to be more agile and create efficiencies in their processes. This business is always a good indicator for us, given they are supporting many staffing companies in both the US and the UK markets. IT has been resilient and demand continues. We're confident that the professional sector offers good growth potential in the medium and long term and will be a significant profit driver for the group. Our property construction and engineering business is UK centric, and it's currently a very small sector for us. However, we have a low cost base. So when demand returns, this sector will quickly return to profitability. And in fact, there was just something released recently about the construction growth in the UK market. So that again is another positive sign. And again, in our offshore recruitment services business, we see increased opportunities as clients seek to make efficiency improvements in their operating models. So all in all, the signs of recovery, it's very difficult to predict, but I do think there are signs of brightness in our future. We're in all the right sectors and all the right places.
And how should investors feel about the future?
Well, as you can imagine, it is very difficult to predict the next stages of the pandemic and the rate of economic recovery. Therefore, we are focused on what we can control, and that is how our business responds to the months ahead. We are confident in the group's ability to fulfill its longer-term growth ambitions. We feel significant progress has been made and will continue to see the benefits of the initiatives we have been and will continue to drive in the period ahead. We will maintain a steadfast focus on our strategic priorities of operational excellence and productivity while ensuring we continue to manage our costs. I would like to thank our shareholders for your continued support, and we are confident we are in a strong position to take advantage when demand returns.